have to start thinking about over the next couple of years, as the market changes, how are you going to be funding your deals and purchasing your deals, especially if the interest rates keep going up, right? And I'm seeing it happen in the marketplace right now. Savvy owners are asking for more interest on, a higher interest rate, even on a private loan. Okay, so the question is, over the course of the next, year to 2 years, what is the market going to look like? And how are we going to be purchasing our facilities? Right. And, so that, and then how can we do that so we can still achieve that double-digit cash on cash return, and even higher if possible, right? We want 20% cash on cash, we want 15 to 20% cash on cash return. Or if we're going to a bank, we want even more money than that, right? So, so that's the question. That's the question of the day. That's what I want to be talking about today. And I hope I just really kind of open your mind to how you can fund your deals over the next couple of years. And maybe buy even more deals. The truth is that when you go to a bank and get financing, you are going to get over leveraged very, very quickly. Okay, banks do not want you to have a lot of loans, especially from other banks, because they want to make sure that you have cash flow and that you can manage, your businesses properly and you can pay them back. Right. So how can you, if a bank is going to tell you no after 1, 2, or 3 facilities, how can you still buy so many facilities? How can you, and especially over the course of the next couple of years when interest rates get higher, and all types of lenders and all types of owners are, more conservative or savvier with their numbers, which is what we're seeing. I mean, essentially, I've just noticed it over the last couple of weeks since the interest rates went up. My private lenders are also, saying, rates are going up. Like, I don't, a private lender does not want to have the same interest rate as a bank. I mean, they want to have a higher interest rate typically. Right now, you'll find some private lenders that are like, oh yeah, no, I'll accept whatever the bank's accepting, I'll accept. And we shoot for that on all of our deals. But I've noticed over the last month or so that some owners that are open to creative deal structures are really asking for higher rates, or they're saying that, they're mentioning it, like the rates are going up. I want to make sure that, whatever I get out of this deal is going to be compared to what, or even better than what the banks are going to get. Because, so I'm offering my money, so I should get a little bit more for that. What I'm talking about right now, if anybody's new and has not done a deal, I see a lot of newbies on here, is creative deal structuring. And I discussed this in our mastermind, and I think I've discussed it a couple of times over the last couple of weeks. But essentially, I'm 100% privately funded. I've been 100% privately funded for 10 years. I've done $20 million in transactions, right? All with private money, private funding. And so I don't go to banks and get loans because I feel like banks are, it's too much work, and now sometimes you can get better deals, but the truth is just as long as you find a deal where you can afford the terms that you're going to be using, right? So when I'm going out and looking for deals, I know I have to look for a deal where I have a lot more spread because I know I'm going to have to pay a higher interest rate. Okay. So if as long as you keep that in mind when you go out and look for deals, then you can use private money, you can use private funding and private money. Okay. And I've been doing that now for 20 years. And and I've worked with every type of lender out there, and I got a lot of deals owner finance to me, or we do creative deal structures on the buy side and the sell side. And and I'm telling y'all that over the course of the next couple of years, you have to learn how to structure deals creatively.